Right, guys, good morning to all of you. Today is the 2nd of July, 2025. CRAZII Market with CRAZII Market Talk with KEL. Right, be crazy with crazy. All right, so let's go into the market today. But before that, disclaimer as usual. All right, do your risk management accordingly. And also do understand this as well. We'll talk about the market. Oh, there's a typo error here. Give me a minute. Yeah. We'll talk about the 1st of July market. Yeah, it's typo here. But forgot to change my wording. Apology. Okay, done. All right. So let's go to the market right now. But before that, there's a lot of macro picture to talk about. Let's go into that. Yeah. Okay. First of all, do understand this. We are 28 days away from the next federal meeting. All right. So it's not like the near term. It's like the 28 days. That means about 30th of July. That will be the next FOMC meeting. And you can see right now we have a little bit of changes. The moment now the current rate is 4.25 to 4.5. About 78.8% of people are now looking at the rate to stay, but about 21.2% have decided to move towards the potential cut. Now, you compare this to just a week ago, it was only 2%. Okay, so now we have increased to 21%. Why is that so? Because Jerome Powell yesterday has mentioned in this talk, he says that by right, there should be a rate cut now. But because of tariff, that's why he has to reconsider. But he's not saying that there won't be a rate cut. He just said that there's a chance of it having it just kind of lower right now, but he will still be observing the data as usual. Yeah. So that is something to take note of. Yeah. So by 30th of July should be the next FOMC meeting. But the one that everybody is quite confident that there will be a rate cut will be 17th of September. 17th September, there's a 72.3% of people looking at a rate cut. Actually, I think that it will likely be happening because they need to have a rate cut to continue to motivate the market. Yeah, that's something very important. Right, morning to you, Lei Chun. All right. Now, the other thing is that the VIX itself, yesterday we talked about VIX, and VIX is staying around somewhere around this area at about 16.83 on the cash market. I think that we are somewhere around there as well. Let me see any news in the market. Well, there's nothing much, but we can see that ISM manufacturing stays in contraction in June as uncertainty over trade conflicts keep firms on the sideline. Yeah? So apparently it's that the US economy is still not doing as well as it is, but the stock market is running ahead of time. Yeah. Okay, so that is what we have now for the VIX side. And if you look at the yield is also forming a base at somewhere around here at about 4.18%. Yeah, that's where my trend line is. I think that is where we will find a base, and let's see whether the market will rebound. Now, if the yield does go up, the bond price will have to come down. Okay, all right, that is it. Now, the dollar index has continued to slide yesterday. Yeah, he reached my technical line. I was 96.63. Yesterday, we have already touched it. Congratulations for those who have followed through. We long the euro and pound. Congratulations, well done. So now the thing is this, will we see a rebound? I think it won't rebound. I think that would be further selling down the road. But if you ask me where's the next support level, right, I haven't done my homework yet. So by right, let me just bring to this area to take a look. A quick one. Let's give me a moment. Let me see this. How do I get this done? Okay, so where we are right now, we are now somewhere around here. So by right, the next technical point based on the KCB, we should have it somewhere around here. And they give you about 96.51. That's not too far. And then the next available one will be all the way to here, and that will be 94.84. Yeah, so that will be the next level. Okay, all right. Now let's go to the stock market to talk about it. Basically, the Dow Jones jumped by 400 points last night. Now, I did tell you that if the Dow stays above OP and pivot 2 yesterday, it will go up to about this 43,400 to 500 area, and it really reached there. Yeah, so it really happened. While the S&P and the Nasdaq go flat. Now, what's the main reason? Because we know that Tesla shares came down yesterday. Now, why is that so? Because we know that the thing is this, because Elon Musk went in and said to Donald Trump that he feels that the big beautiful bill is really a nonsense. Hence, therefore, wants the government people to actually take this out. But he did it on a Saturday, so that's why there is no way Donald Trump can impact him. So apparently now Monday, when the market opens, nothing happened. Probably they are buying some put maybe. And then yesterday, they go for it. So yesterday, Tesla share tumbled after Donald Trump said the Doge should look at Elon Musk subsidies. Oh my God. So by doing that itself, straight away, we saw Tesla share going down quite a fair bit. Now let's go Tesla share. Now you can see that Tesla share basically really went down pretty badly. Okay, let me just show you a chart right now. Okay, what now? Okay. You see Tesla share basically gapped down by 5.34% on closing. Okay, so the thing is this, all right, is it good time to buy some Tesla? Well, if you ask me, I would say that maybe you can get some point here. So if your Tesla can hit about $284, I think you can try to buy some Tesla somewhere around here. So okay, so you can consider that, okay, for Tesla share. So if it goes down to $284, you can try, okay? Yesterday, we can see that the share price came down quite a fair bit. And the thing is, this one thing note here, Tesla is expected to deliver 1 million units in H2 2025 to meet growth targets, yeah? A cheaper Model Y version expected to begin production by late June. And of course, do note Tesla has already faced 6 straight years of declining quarterly new registration in Western Europe, yeah. So that's expected to go down further. And the thing is this, looking at there'll be earnings out coming out, I think tomorrow, I think, you're not wrong. So if the thing is that it doesn't come out as good, the market, the share price is expected to go lower. Now there's a gap over here itself. I can put it there just for us to remember. Now this gap itself is not small. So I'm going to put it down there at 237. So if there's going to be a real sell-off because of Donald Trump and the earning report and stuff like that, then of course we can expect to see a real coming down all the way to the next CRAZII V gap to about $238. Okay, so watch out for 284 first as a first support. If the price really jump down, we can even see 238. All right, that will really make Elon Musk a bit painful. Yeah, because he went through this before the share price went up recently, and then now it's going back down again. Okay, so that is the main driver of the market recently. And of course, Bank of England chief sees downward interest rate trend as UK hunts for growth. And Jerome Powell, as mentioned, he will actually have rate cut if not for the tariff. Then we have bank basically giving thumbs up on Donald Trump big beautiful bill, feel that it could boost the US economy despite the deficit concern. That means that there'll be a lot of spending in the market, but to the bank, it's okay. Well, I mean, I make money from my interest, so it's okay to spend as much as you want, so I can pay you back. All right, and Eurozone inflation edged low higher, hitting the ECB 2%. All right, that's something interesting because previously it was 1.9%, now it's 2%. So the thing is this, is that the market now for US is that still at 2.3, 2.5%. So now the thing is this, if let's say it's going to continue moving up, then probably the central bank has to come in. All right, because central bank has been cutting rate. Remember, they cut rate, but the inflation pick up. So that means that, right, by cutting rates itself will definitely incur inflation. That is for sure, and that's happening now in Europe. Yeah. Okay, so what is the tip between Donald Trump and that? Oh well, basically you can see the two of them. Okay, I don't mind Elon turning against me. He has done that so months ago. This is the greatest bill. If the bill doesn't pass, there'll be a 68% tax increase and it will be far worse. I didn't create a mess. I'm here to fix it. Okay, so basically he's doing that. And, Elon Musk should focus on getting himself out of the Twitter mess because he owed $44 billion for something that perhaps worthless and loads of competition for electric cars. So basically is that they start firing each other. Basically, they're all firing each other now on the big beautiful bill. And of course, by saying that they will look at the subsidiaries, all these things basically make Elon Musk pissed. I find that particular article whereby Elon Musk say, okay, be it, come on, let's cut this right now. You don't care. Okay, so it's really like two lovers fighting each other out. Yeah, very, very crazy and stupid in my opinion. But again, who knows? It's a smoke screen. Who knows? The two of them are doing a smoke screen while they push the market. Who knows? Never know. Okay, so now let's look at the US Dow Jones for today. Now, I know that by saying this like a broken recorder, we have this 8th day in a row, the market rising on the Dow Jones, and it's seemingly that it's burning everybody's patience with this. But again, I repeat, guys, as long market stays above OP, you cannot fight the market. I know that we are at a very overbought situation. I know that basically the fundamental of the Dow Jones is really at crazy level. I know that the valuation doesn't equivalent. I know that the buffer indicators is at a high right now. I mean, basically, whatever you think that you know, I probably also know that too. But the thing is this, there's something that we don't know is that when the market want to buy, means they want to buy. So when the market stays above OP, you just have to follow one simple principle: buy. That's all. And this is the craziest part because people cannot get over it because they feel that, KEL, if your indicator is so good, then you should just change your indicator to RSI, stochastic, MACD, then we'll all be buying. Then we won't be having this problem. This is where I get very sad. Okay, look at this, guys. Imagine this, when the market was coming down over here itself, right, and the KSI was green, and I told you guys you can short the market but can buy. Then again, the same thing happened. You guys will say that, oh, guys, this is coming down, and you can't ask me to buy. That's crazy. But when the price go up itself, right, ask you to buy, you say none of your bought. You understand my point? So it's very, very funny here. So, okay, if you want to have something that is going along with the market, then put an RSI in. Okay, or put stochastic. Okay, give example, I'll put a stochastic indicator and then trend. Then maybe you find oscillator, in fact, better still. Or, okay, we do a stochastic, okay? And then just put a conventional and make sure the color is nice, okay? Make it very more attractive to you, okay? And press OK. Then you see, then you see what you want to see, right? Then you see that, okay, see the price going up and the indicators all moving up. So you should be buying. Okay, fair enough. Now, by putting this aside, right, it will probably make you a better trader. But isn't that this available for the many, many years already in the market? Exactly, you see. The thing is this, imagine here is somewhere when the market is coming down, we were buying because of this. That means that when we short the market, we just take profit along the way, but we know that the market will rebound. Then when the market rebound itself, right, we just will be buying in the market and so forth. So if you think that having this will be better for you, then go ahead, put it in. Now, previously in the past, I stopped people from putting other indicator into my chart because I don't want to be confused. But I realized that this is not possible because people will still want to see what they want to see. So that's why put whatever indicators that you want into the chart, then trade accordingly. But do yourself a favor. Remember that, you have both or best of both worlds. Why choose one, right? Okay, so now the thing is this, using the conventional indicator, we know that stochastic now is pinching at the top. And normally when it pinch, we are always going to see a potential pullback. Okay, so you had the fact there already, right? Now the next thing is this, you have the KSI hasn't been read for the last 6, 7 days. So again, that's fact, right? Okay, today the opening price is 44,504. And now the pivot 2 is 44,572. So which means that the OP is below pivot 2. Then there's nothing much to say. If the market stays below OP, which is now short sell the market to where? To the nearest technical point, which is 44278 MLP. As simple as that. If you're buying, then above the OP and above the pivot 2, buy until you see this number, which is 44938. Okay. So like that, all of us are happy. You know what to do. Buy, you know what to do. Sell, you know what to do. It's as simple as that. Now, some people say, KEL, like that, you got no directive. Is that now it's like everything also can, buy also can, sell also can. Like you don't have a principle here. Ayo, guys, how much is this so-called trading principle worth? Making money is the main thing. If the market want to buy, we buy. If the market want to sell, we sell. We make the money for today. Now, if you want to buy and keep it for long term, like 2, 3 months, then you can scrape away technical. You don't need technical. You're buying for long term. Just buy and keep. Go lower, buy some more, right? So this is different. So please don't confuse yourself with whatever you need to do. Yeah, I don't think it's necessary. Okay, I'm giving you an alternative right now. Just like yesterday gold, right? Yesterday gold is out when the market was above OP, you buy. Today gold is below OP, you sell. As simple as that. What's so difficult? All right, so let's look at gold yesterday. Gold yesterday open only, right? Okay, I tell you to buy, right? Again, everybody was saying that, oh, KEL, crazy lah. Gold not so much really can buy, man. I think it will crash. See, yesterday gold go up. Then the last part towards the end, and everybody chasing the buy gold out of your way. Then after that, never mind. This morning, many people buy gold. I say, why? Because they say yesterday go up. Guys, the opening price is 33.39. Today now is 33.31. How to buy? If you bought in the morning, cut already, right? Correct now. Below OP is a sell. 3339 below OP, below pivot 2 is confirmed sell already. And the KSI is red some more. KCX is blue some more. Then, but yesterday got CCRY. Oh yeah, I know yesterday got CCRY, but the CCRY condition is that must be above OP, right? This is what we learn, right? Everything itself had to be OP. But KL, this morning the market break MA. I know it broke, but it broke already, reversed down. Oh gosh, that's worse. You all know that MA, right? When you touch MA, once you touch MA, can go past it, then of course can go stronger. But if MA touches it and reverse, it's confirmed sell one. No need to say. All right. So you see, guys, the market got touch MA and not have. You see, the green dot is there already. So once you touch the green dot, the price come down. And do you see a 4-diamond here? You see? Oh, okay. Because no app, yeah. Okay, then you see that so below the OP is a sell, right? Below OP is a sell because you can see the market just cannot go up. So this is why the diamond is so powerful. It gives you this particular level. And see the market hit this level, just cannot go higher, reverse backward down, boom, come down already. It's that simple. Yeah, nothing difficult. You just have to follow the rules. If you miss the first one, then the second one here, right? There's a 4-diamond over here. Repeat the same process, move the line out to the closing price of the candle, which is here roughly. And then same thing, CCYR here, sell. Okay? So you see, nothing changed. What's so difficult? Nothing have changed. You just have to follow the rule. They said that after you buy, right? Example, now the price coming down, you feel not shook. You say, yeah, what a waste. I just bought, I'm gonna cut again. Walao. I know. That is usually the case, yeah. But what to do, guys? We are traders, we're not investors. Okay. If you want to be an investor, then yes, buy gold, keep it, top up whenever you need to top up until you see 2868. Okay. Actually, 3868. Okay. My target is like this, okay. 368. Sorry. 36. You all confused me. 3682. Yeah, sorry. Okay. Sorry, my bad. Okay, so this is a number that I think the gold will go up. So there's another 10% upside, another 10%. I think another 10% too, we will reach that level already. I think another 10%, I think the market should peak around there. Now, anything more than 3,700, I won't be buying. If I buy, it will be very, very, very small just for the fun of it. Yeah, because it's like crazy. It's like thinking at $3,700, 100 grams running around in the world. It's like, doesn't make sense, right? Correct. 100 ounces here. Okay, so that is the Dow Jones for you. So I hope you guys have heard me today. Please trade with the OP rule, okay? Especially today now, the Dow Jones, the gold price now is trading below pivot 2, yeah? So don't mess around with it. It can go lower. How low can it go? It can go all the way to the MLP hall, 3320. Don't play with it because it's the nearest technical point is MLP at 3320. So the market, I think later on will go down again. Okay? Yeah. But KEL, why is the Jerome Powell want to cut interest rate already, right? Why the dollar didn't go up? Well, didn't you see the two sides of the story? He said that he will cut it when necessary. He didn't say that he must cut it or will cut it. He didn't say that. So that's the reason why the market say, okay, on the good side, he may want to cut. On the bad side, that he may not cut in the near term because the tariff haven't come in yet, right? The impact haven't come in. So we have to see the tariff first. So that's how the market perceived, in our own way. All right, next market look at it will be the oil market as one people requested. Oil have been very, very sideways, but the thing is this, the KSI is reducing, so which means that we might see a bottoming out effect soon. All right, but this coming Thursday and Friday, we have the US numbers and non-farm payroll that may distract because the whole thing, so watch out for that, yeah? Now today to buy itself is 68.82. If the market can stay above this number, it'll be safer. Not right, just purely above what we can buy, but then you could expect some torturing in between. So the best is this with for 6682, break already, then see whether they can touch this 2MA. If we all good itself, right, then we can look forward to see the highest point here itself. All right, maybe in a few months' time. Okay, all right, all clear. All right, last one is currency market. Now the currency market today on the cover. Okay, hold on. And on the cover will be the this euro. All right, so euro positioning and the Dow position is almost identical. The way they go is very similar, right? So I can guarantee you this is because there's a lot of funds now in the market. And who provide the funds? Of course, the Federal Reserve. They must have pumped enough money to basically buy off the treasuries and pay back 4%. And then with some money on the hand itself, they may just spend in the stock market just to push it up and maintain and make the bond market looks good. Yeah, so that is how I see it. Now, for today, the euro now is trading at 1.1795, but the opening price is 1.18. So same thing for the euro, if you're going to break down, it has to break below OP first, and then it should be targeting at 1.1729. Wait, something wrong with the screen here. Okay, all cool. All right, guys, thank you very much for this morning's session. I will see you guys in about next 2 minutes to talk about yesterday's market. All right, don't leave on the screen. Yeah, I don't want to leave it. Okay, bye-bye.